Is up, everybody. Give a few seconds for the tubes to connect. Going live here on YouTube and Twitter, as well as Telegram. Still live on Telegram community. We just did a fun little 15-minute pregame over there. So guys, join the Telegram group. You can find that link in the description or in my bio if you're watching on Twitter. So what you're looking at here is bitcoinandmarkets.com. This is where I do all my writing on Bitcoin. And it's also shared with roguemacro.substack.com at the premium tier. So if you subscribe to the premium tier, you get the premium for both. I haven't been writing so much over the last, say, 10 days. Of course, we had the holiday with Thanksgiving, but also Bitcoin's market price has just been very disappointing and a really weird time in macro in general. I have covered that on some of my writings and a lot of my live streams, but that's why there has been a little bit less content coming out over the last couple weeks. So, okay, let's get into the price and talk about it. So Bitcoin does look to be back. We will see where we end the day. This is an hourly chart. You can see yesterday morning, big dip coming. It's just to start the week. Nice formation. Breaking out of this pattern. And heading up. Now, if we go out to the daily, are we at a bottom? I think we are. If we bring up the RSI, extremely oversold. We did not get a bullish divergence here, but the wick, the wick came down here and was threatening to get a bullish divergence. But look how close we are to the all-time high, guys. It hasn't been that long since we've been back up here. Sure, it's been a lot of percentage. Let's see how far off we are from the all-time high right now. Right now, we're 27% off the all-time high. Bitcoin can make that up very, very quickly, especially if this market wants to turn around. So that's what I'm looking at on the Bitcoin chart weekly. If we look at the RSI, it is the most oversold on RSI. It's going all the way back to the bear market. So there we go. Let's take a look at some other things around. We got gold. Gold, similar to Bitcoin's value proposition right here. And it is, of course, we all know it got to all-time highs. When gold tends to top over the last 2-3 years, that's when Bitcoin's rallies have started. And so are we at a top for gold? We will see. Trying to break out here again, but facing some horizontal resistance. And we will see where gold ends up. Of course, I've been bullish on gold and Bitcoin for many, many years. How about the dollar? Dollar is finding it hard to break above 100, but I think that it will over the next little while. One thing I've been watching, Nick Bhatia, friend of the show, he has been watching this as well. SOFR, this is showing some extreme liquidity stress in the system right now. This is the Fed funds range, and you can see it's over the range at a weird time. I mean, it is the end of the month, which these red arrows have showed the end of the month, but they have quickly, July 1st, it's already on its way down, and it rapidly falls back down, and it's not outside of the Fed funds, so that's different too. June 2nd is first trading day of the month. It's sideways, and then it's rapidly down. Same here with April. First day is down of the month, and then it rapidly falls down. Then we have these meeting points where there's some stress in the liquidity of general macro, and so it's spiking here right before these cuts. We've seen that in the last 2 cuts. The next cut, though, is not for a week tomorrow, and so this is a really end of the month spike here. We'll see where that ends up, but this is signaling some stress in the market. All right. So going back to the dollar, as we're fighting these stress points, this is showing that the dollar is ready to move higher. It's ready to strengthen. All right, let's go down to US 10-year. Now we won't take a look at that. SP 500, very similar to gold here at this point, actually trying to break out of the same sort of topping pattern. We'll see if it does so. I am technically bullish for the time being on stocks, but we will again have to wait and see on a day-to-day basis how that ends up. All right, let me see who's all in the chat. Dex Invictus back with us. Dex, you joined the Telegram, did you not? Haven't seen you around in there. It's been live. I haven't been live streaming on YouTube, but I've been live streaming on Telegram regularly, so check that out if you haven't. Dex, as an example, man, we just spent 15 minutes going over MSTR, going over all the stuff going on with JP Morgan and Vanguard and Ponzi scheme allegations. And so it was a real fun time. Let's get into some of that here now. Let's go over this Vanguard news. If I can pull up my profile and go through and find some good examples of what we're talking about here. All right. Comments are open. Oh, and Dex. Oh, okay. Well, keep working hard, man. I have been doing spaces with bitcointreasuries.net as well. So if you're on Twitter, you can find me there at least a couple times a week, trying to do big Friday shows where we get, several speakers on. I think we had about 1,000 listeners last week. So the Friday shows are doing pretty good. So check that out if you haven't yet as well. But okay, so here we are. Let's take a look at some of this news. There we are. All right, we're going to just go through some of these tweets, and then, as a stream of consciousness, we'll get to the point. So here's HODL 15 Capital. If you guys aren't following him, I recommend that you do. And here he says that, excuse me, 27.5 million shares sold short, representing 10% of the public float. Okay, so on Telegram, I said 25. I was wrong. It's 10%. So to cover their shorts, they're going to have to buy $6 billion worth of MSTR. So in this scheme that we've kind of uncovered, and for you guys, sorry, Telegram, this is going to be a little bit of rehashing this, but I am not a conspiracy theory person, but I do believe in like limited conspiracies, smaller conspiracies of a couple parties for a limited period of time. I think those are likely. Oh, wait, I'm not sharing my screen on Telegram. Sorry, guys. I will remedy that immediately. Okay, there we go. So, limited conspiracy theories. And I think that's what we're seeing right now. And JP Morgan is guilty of that in the past. Billions and billions of dollars of fines for this type of market manipulation that they're being accused of right here with MSTR. So what it looks like they did was over probably 12 months, because some of this plumbing has been in place for over 12 months with JP Morgan and this new offering that they have. But they came out and they said that they're going to offer a Bitcoin-backed note using IBIT, somewhat similar to MSTR's offering. And so they probably, what likely happened was they were getting this demand for a while. They started getting the plumbing going. Then they concocted this series of events. MSCI came out and gave them, said, not threatened to, but said there's a possibility that they could delist MSTR, which if you guys have been following the space, we talked about that a lot about 2 weeks ago. And that idea was debunked as just a fake rumor. I mean, it was not a fake rumor, but a fake threat, because MSTR's like ecosystem, including derivatives off of MSTR, like things like MSTY and other options funds that you can buy, as well as all the preferreds and all of the derivatives of MSTR's ecosystem, is approaching 100 billion or even over 100 billion. And it depends on, Bitcoin's price. I mean, Bitcoin price goes up 50%. Then MSTR's ecosystem is approaching 200 billion, right? Like really quickly. And so it's just too big of an ecosystem, especially when you talk about BlackRock being involved and all this stuff, it's a fake threat. Okay. Then we find out JP Morgan is selling all these MSTR shares short. And the total market now is 10% of all shares are sold short on MSTR. Right at that time, then all of a sudden they are now offering this new product, and it goes on sale on the 15th, I think, of December, something around there. So all of these things line up for this limited conspiracy against MSTR and against Bitcoin. And I think that's one thing that's been pushing Bitcoin's price down, and which has been giving us this eerie feeling in the market. I don't know how to describe it. Yes, I am an economist. I'm a macro guy, but when price does not match fundamentals to such a degree, I mean, it gives you an eerie feeling. And that's the kind of the eerie feeling that we've had over the last, I would say, since the all-time high, really, maybe since October 10th. And maybe October 10th, I mean, there could be a debrief or an analysis, what do you call it, post-mortem of October 10th, the crash back on October 10th, and there would be funny business going on there as well. There's been rumors about Binance and different whales and all this stuff going back to that October 10th big sell-off, and who knows, it could be all in there as well, playing crazy games. All right. Also, right now, we're approaching a weird confluence of events. So yesterday, the Fed wrapped up QT. And let me just go into exactly what that is. So QT is where they were allowing treasuries and mortgage-backed securities to roll off their balance sheet. When they matured, they did not replace them. Okay. They replaced some of them because they only wanted a certain amount to be rolled off, say 10 billion a month. And so they would, if 20 billion rolled off, they would have to buy 10 billion to keep it at 10 billion rolling off. So they were actively buying some, but now they've stopped. So they are actually out there in the marketplace consistently buying every month to replace what's rolled off. And they're kind of qualitatively twisting away from mortgage-backed securities. So they're letting mortgage-backed securities continue to drain off, and they're keeping their total steady. So that means that they have to be buying more of treasuries. So that's what they're doing. They're keeping their balance sheet steady right now. Also, Powell has talked about in the future it being appropriate to raise the level of their reserves. And how do you do that? Well, you actually have to buy more treasuries. So you have to have a positive impact on the market there, buying more treasuries, taking those treasuries off the market and increasing your total. And the reason for that is because they have this idea that there's something in the financial system that requires these reserves held at the Fed, which is unproven. It's a theory. I wouldn't even say it's a full-blown theory because theories have been proven to an extent. This really hasn't been proven at all. It's just an idea, a concept, a hypothesis maybe is the best term for it. So that's what they think. And so right now they say they have ample reserves. But in the future, as the banking system and as the economy grows, it's that level of ample needs to increase. Okay, say they have 10% of reserves in the system to back the system or whatever. And as the economy grows, that 10% shrinks now, and maybe it's only 8%. So they need to top it up back up to 10%. So that's why Powell came out in the last meeting and he said that in the future, they're going to have to increase their reserves. They won't call that quantitative easing, though. They'll probably call it like the reserve balance facility or something, some double speak out there so they won't call it QE. Of course, everybody is going to say this is QE, another instance of QE 6 or 7 or wherever we are. And is it QE? Well, kind of. It effectively is the same thing, but whatever. So that came yesterday overnight here. They stopped their QT and they're going into keeping this level of ample reserves, which is a change in the market. Okay. Also, we have the next cut likely coming up on the 10th of December. Odds are about 89% right now. I checked them today. They're 89%. So probably we'll see another cut coming next week from the Fed. Now, on top of that, on top of JP Morgan, on top of MSTR FUD, on top of everything going on, now we have Vanguard coming out. And this is the tweet I wanted to highlight here. This is from Brian Hirschfield. He's now a friend of the show. He's a friend of the spaces that I do there with BitcoinTreasuries.net. And he is a holy cow. Former actuary. Yeah, that's what he is. Former actuary. He was doing really, he was working, he was like a Wall Street actuary. He wasn't just some insurance company actuary, I don't think. He was like in these big deals and things. And so he kind of knows the plumbing. And he came out with his book, Bitcoin for Institutions. And so he's come on the spaces, and he has a really good perspective on this, almost like a mathematical perspective of this market, which is kind of cool. And so yeah, he's talking about Vanguard's approach here, and he says people won't even comprehend how bullish this is. Vanguard said they observed Bitcoin through many cycles and now are comfortable with it. So would they be comfortable with it at a cycle high? And would Vanguard have their spies and their tentacles and their analysts intertwined with all these other big shops, big wealth management stuff, and they know what the demand is from their clients? They probably know what the demand is in the market, as in total. They know what's going on some of the deeper levels of demand and where this is all headed. And they have said they are observing Bitcoin through many cycles. And now they're comfortable with it. Is this a bottom, or is this a top, or is this a bottom? Sounds a lot more like a bottom to me. So either they're saying they believe Bitcoin is here to stay, or they're capitulating their faces off. So famously, the previous CEO said they're never going to allow Bitcoin ETFs for their customers. And now a year later, just within a month, that guy was fired. Now they brought on some guy, I think, that previously worked at BlackRock and in charge of the BlackRock's Bitcoin research desk. And now he's the CEO of Vanguard, and now Vanguard's allowing this. So it's an amazing 180 from some of the, these are the most powerful people in the world, guys. The CEO of Vanguard and the CEO of BlackRock and the CEO of JP Morgan, they have all now given the green light to Bitcoin. They wouldn't do that if they had a choice, probably. It's not like these guys are Bitcoiners. It's not like they have a love for monetary economics and they have deep dived into Bitcoin and the gold standard and the fiat money. Maybe they have, but it's not like their love for it. They're not Bitcoiners. Okay. These are people that would push stiff arm Bitcoin if they could. But they know, they smell what's coming. They know what's coming. They see what's coming. They have that deep knowledge of the market, of demand out there from their clients, from everybody's clients. These people work for each other. They hop across from company to company, like Vanguard's new CEO, just coming from BlackRock or somewhere else, right? So these guys know these things. Deep knowledge. It's kind of similar to how I would always treat miners back in the day. And I was saying that miners because miners are exposed to different fundamentals than just, say, your average retail or even accredited investor is. And so these miners, when they're buying or selling, this is 5 years ago, before treasury companies became a thing, right? They have deep knowledge of different fundamentals. And so watching what they do was very important, I thought, um, to knowing, to kind of deciphering what the fundamentals of the space were. And now we have these companies. If you were to take this as a signal of deciphering the actual fundamentals going on in the market, what would you decipher? What would you come to as a conclusion? That there is, slacking demand. The demand that we saw in 2024 and 2025 for these ETFs is falling off, or just getting started? Is MicroStrategy's types of credit that they're building, this credit ecosystem that they're building, is demand for that falling off? Do they truly think that it doesn't have a future? No. JP Morgan's offering a competitive product. Like, these are the deep fundamentals of the space. And what has to, you have to hold on to those deep fundamentals to get through some of the FUD, to get through some of the down market, to get through some of these things. It's more than just a passing interest in Bitcoin. It's knowing how to decipher these things. And I'm not like saying I have some special wisdom, woo-woo wisdom. I'm not some Marxist, cultural Marxist guy that says, I have the critical consciousness to know what is reality. No, I'm not saying that. I'm saying that this is a huge signal. You have to be able to filter noise and find the signal. And man, I could go on a huge tangent about that, because right now we are about to experience a mass amount of noise. We have been experiencing it for the last, I would say, 6 to 12 months. As AI really ramps up, the new noise level is getting cranked up. And what can you hide in noise? You can hide propaganda in noise. Programming. You have to be able to find the signal, and this is the signal, in my opinion. Okay, so what does Vanguard say? Let's open this up. Oh, now my computer's slow. Stream is sucking all my bandwidth. Okay. When it comes to investment products, we create our posture. Our posture has not changed. We focus on products that generate cash flow in a transparent way, such as interest payments and dividends. At this time, Vanguard has no plans to launch their own cryptocurrency ETFs or mutual funds. Okay, good, great, fine. Just as we do with all investment vehicles and asset classes, Vanguard consistently monitors the cryptocurrency space. This ongoing analysis has informed our decision to allow most third-party cryptocurrency ETFs, they mean Bitcoin, right, and mutual funds on our brokerage platforms. These products have been tested through periods of market volatility, performing as designed while maintaining liquidity. The administrative process to service these types of funds have matured, and investor preferences continue to evolve. Our brokerage platform is designed to provide access to a broad range of investment options, including most third-party Bitcoin ETFs and mutual funds that meet regulatory standards. This approach is consistent with our long-standing policy. For example, gold funds are available on our brokerage platform, but we have never offered a gold ETF. All right. Very interesting what's going on there with Vanguard. Very deep fundamental going on in the space. Here's JP Morgan just talking this morning. TFTC Marty Bent says JP Morgan just told CNBC that Bitcoin is a leading indicator for the entire US market. First they ignore you, then they front run you. So yeah, I mean, they just spent the last 2 weeks, 3 weeks fudding on Bitcoin, shorting MSTR, and now what do? They turn around and they pump it. They let the brakes off. And guys, I really think that this could get crazy. I mean, probably not as crazy as in the past, right? With Bitcoin going up 10, 20x. That probably isn't going to happen, at least in the near, say, 4 or 5 years, maybe. But This could, if they've gotten there. I remember having British Hodl on the space over there on bitcointreasuries.net, and he was saying, they're arranging their deck chairs, like they're arranging their seats, they're getting their positions set. And yeah, that's, I guess that's common sense. They pretend to fight you, or they are fighting you while they're getting their positions stable. And once they get their positions stable, that's when things get exciting. Okay. And that's what it feels like right now. The confluence of all these things coming together right now feels like they've gotten all their positions set. The deck chairs have been arranged, and now they're ready to let it go. All right. All right, let's see. Ben Workman has this comment here. Long leverage gets flushed from Binance exploit. That is the 1010, right? He's talking about 1010. I think that's going to have a post-mortem done on it. Bitcoin has a 30% drawdown. MSTR FUD amplifies. Banks start marketing structured Bitcoin notes. That is the JP Morgan thing. Vanguard opens Bitcoin ETF access. Could be billions of dollars in a matter of weeks coming into Bitcoin. QT ends. Now, I don't know if you believe in coincidences or not, but wow, what timing TradFi has. Yep. Also, SEC Chair Paul Atkins confirms Bitcoin innovation exemption coming in January. That's just yet another thing that we're seeing rolling down the pike. All right, let's continue down here. They're calling this Operation Choke Point 3.0, attacking Sailor and MSTR. David Sachs, who I'm not 100% comfortable with David Sachs, but he seems to be good faith actor right now. But yeah, saying attacking, he's been under attack the last couple of days in the media, New York Times, I believe, saying he has conflicts of interest and yada, 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 even though he has sold all of his Bitcoin and other tokens. So he's been under attack, though. Sailor, Sachs, and now Tether. A lot of people coming out with Tether showing their balance sheet, saying that it doesn't balance out. They have too many liabilities to yada, yada, yada. Let me just cover that real quick. Let's see if I have a tweet about it. Don't know if I have that. Here's this about David Sachs and this New York Times hoax. See what they wrote about there. Okay. Okay. So this came out. Arthur Hayes came out the other day. I don't know what all his affiliations and who he's working with or whatever, but he always seems to call bottoms and inflection points. And he says Tether folks are in the early innings of running a massive interest rate trade. How I read this audit is they think the Fed will cut rates, which crushes their interest income. In response, they are buying gold and Bitcoin, so that should, in theory, moon as the price of money falls. Roughly 30% decline in the gold plus Bitcoin position would wipe out their equity. That's an important statement. And then USDT would be, in theory, insolvent. I'm sure some large holders and exchanges will demand real-time view of their Bitcoin, I guess, or BS, so they can assess the solvency risk of Tether. Get your popcorn out. Okay, so he's throwing some gas on the fire here, and they're showing the assets, subtotal of their assets here, 139 billion. Yeah, that's billion. And they have, including all Bitcoin and precious metals, then you get to 181. And people I think their supply of Tether is like 174 or something like that. So they're still over collateralized here, 181 to 174. But guys, this does not include their off balance sheet position. And I think I tweeted about it too, but the equity buffer on the Tether entity looks thin because all of the profits are being pulled out via dividend. Look at the second table below. If all of the profits had been retained in the equity, then there would be an immense net equity buffer. So they are owned by their own shareholders, private shareholders. They make $1 billion a month or something, or $5 billion a quarter, something crazy. They're the most profitable company per employee, definitely in the history of mankind. Okay, they make probably 20 or more billion dollars a year, and they pull out most of that profit to their shareholders. It's held as retained earnings and it's invested in other companies. It's also, but it's not on the balance sheet of Tether when it comes to their assets and liabilities. They don't need to count that. They already have assets in, excess of their liabilities on their public balance sheet here. Why do they need to show these retained earnings, which normally are off balance sheet? Why would they need to do that? This guy says, who is this? Plur Daddy. Don't know who he is. If prices of gold or Bitcoin were to decline significantly from here, the entity could get upside down temporarily with liabilities exceeding assets, but clearly there is a parent entity sitting on massive wealth, as well as constant cash generation that could help offset any losses quickly. Given how profitable the operating entity is, it would be highly illogical for the parent entity to abandon it unless something were to materially change. Net, I wouldn't worry about this here. If Trump takes control of the Fed and crushes rates down 200 to 300 basis points, Tether will become a lot less profitable. But even then, it will still be a cash cow and valuable business given how low its operating costs are. Yeah, I think I have another one here. Let me see if I can find it real quick. I think I shared it in the Telegram as well, but I can't find it right off. Anyway, all right. So that's what I'm thinking is going on with Bitcoin market right now. Make sure you guys check out bitcoinandmarkets.com. Subscribe over there, at least for the free blog posts that do come out on a periodic basis. And if you want to support my content, which I've been an open and honest source of content and insight in Bitcoin for going on, dang, how long has it been? 9 years. So if you guys want to support me and make this become a sustainable thing, I would appreciate that. Check out bitcoinandmarkets.com, sign up for the pro tier, and I would appreciate that. Let me check the comments here. 6 days a week, coworkers. Ain't shit. Well, I hope you get some time off for the holidays there, Dex. Thanks for being a consistent viewer. All right, let me check and see. Okay, Peter, you have something. Okay, for those guys that are watching now, the pregame show we had just Telegram exclusive. We were talking about Ponzi schemes and how MSTR has been being labeled as a Ponzi scheme. And then we started talking about Ponzi scheme versus what Ponzi finance means. We're getting all into that and how MSTR doesn't quite fit. Let's see. Peter has something. So he says here, straight from Hyman Minsky's writings. Okay, let me read this. The cash flows of participants in income production are expected to exceed the contractual payments. All right, I'll have to read this later, but maybe I'm misunderstanding it, but that's what I found. All right. So we're going to wrap it there for the live stream. I will be hanging out with Telegram a little bit longer, and I will see you guys all on the next one. Like and subscribe. See you. Bye.